So, in 2025, the short-term rental industry got hit by a shockwave. A massive event folks are calling the Great Correction. It was a moment that saw giants absolutely crumble and a whole new world order rise right from their ashes. In this explainer, we're going to break down exactly what happened, why it happened, and most importantly, what it means for the future.
Okay, let's map out our journey. We're going to start with the dramatic, almost unbelievable collapse of the industry's biggest names. Then we'll play detective and diagnose the fatal flaw that was baked into their DNA. After that, we'll look at the comeback story, the local first revolution. We'll also dive into two massive forces, the unstoppable rise of AI and how regulation pretty much became the ultimate kingmaker. And finally, we'll see where this all leads to this brand new era of flexible living. All right, first up, the fall of the giants. You see, to really get the revolution that's happening now, you first have to understand the spectacular collapse that made it all possible. The big question is, what went so catastrophically wrong?
Just take a look at this chart. This shows the valuation of the Casa, which was once a titan of this industry. I mean, it goes from a peak of over $1 billion and then just nosedives. It's a total and complete wipeout. The question this slide is asking is the one we have to answer. How on earth does something like this even happen? And you know what? Vacasa wasn't alone. Not by a long shot. Sonder, another industry darling, was once valued at a staggering $2.2 billion. By late 2025, they were in liquidation. Gone. And Vacasa? Yeah, they were eventually acquired, but only for their leftover inventory, not for their totally broken business model. We are talking about a complete and total failure of the old guard here.
So, what was the disease? What was the underlying problem that took down these behemoths? Let's prop the hood, do a little autopsy, and figure out the central diagnosis.
For Sonder, the fatal flaw was what we call an asset-heavy model. Basically, they went out and signed long-term, fixed-cost leases on thousands of properties, mostly in expensive cities. This locked them into enormous, guaranteed expenses. So when revenue started getting unpredictable because of market shifts, well, those fixed costs became a giant anchor that just pulled the entire company right under the water. Now, Vocasa's problem was a bit different, but it was just as deadly. They suffered from centralized bloat. They tried to run this massive coast-to-coast portfolio from a single, top-heavy corporate headquarters. This created absolutely huge overhead costs. And, this is the real kicker, it totally disconnected them from the local knowledge you need to actually succeed. So where Sonder was killed by fixed financial problems, Vacasa was killed by bloated operational problems. Its business model was just unsustainable by design. And this quote right here, it just brilliantly sums up the market's final verdict. It says it all. The collapse wasn't just a bad quarter. It was a firm, definitive rejection of that entire way of doing business. Being big didn't save them. In fact, it just made the failure that much more spectacular. But out of all that failure, a new, smarter, and way more resilient model rose from the ashes. This is the story of the winners. This is the local first revolution. And this right here is the blueprint for the new era. Instead of one single bloated empire trying to control everything, the future is what we're calling a local first federation. It's a hub-and-spoke model that is built from the ground up for agility and, most importantly, resilience. So why does this model work so well? Well, think of it like this. The central hub provides all the powerful technology, the marketing muscle, and the back-end support. But the spokes, those are the expert local operators right there on the ground. A corporate manager in an office 500 miles away has no idea that the local chili festival is about to triple demand next weekend. But the local operator, they sure do. This model combines that vital, on-the-ground expertise with the power of a centralized tech platform. It really is the best of both worlds. And this one image tells the entire story of the takeover. It's perfect. On the left, you've got the old, fallen Vacasa. On the right, Vacasa, a Casago company. Casago, a company built on that exact, nimble, local-first model, literally acquired the assets of its fallen rival. This isn't a theory. This is the new playbook in action right before our eyes. But this new local-first model didn't just appear out of thin air. Its rise was supercharged by two massive, game-changing forces that are reshaping the entire industry. The first one, and you could argue it's the most powerful, is the rise of artificial intelligence. And here's the crucial point.
The smart money completely changed its strategy. This quote says it plain as day. Investors stopped throwing cash at companies with massive payrolls and started backing platforms that could deliver incredible efficiency through automation. It's a total pivot. This visual illustrates that capital migration perfectly. The flow of investment cash shifted away from the old model, funding operators with huge headcounts who were using clunky, outdated software, and it moved directly into these new AI-native platforms that function as the new operating system for the business. And this right here is the key takeaway. AI is not just another piece of software you buy to help with admin tasks. No way. It has become the foundational infrastructure of the entire industry. It's automating something like 80% of communications. It's running all the operational workflows, and it's providing the business intelligence you need to survive. It is the operating system. The second megatrend is just as powerful, maybe even more so. It's the one force that can make or break your business, sometimes literally overnight. Government regulation. I mean, this says it all, doesn't it? Regulation is now the #1 factor in determining who can grow. It's more important than how much cash you have, how good your tech is, or how strong your brand is. The single most important strategic question has become, where are you allowed to do business? And what's happened is that this has basically split the world into two totally distinct zones. On one side, you have the good STR markets. Think places like Florida, the UK coast, or Dubai, which are pro-business and are attracting tons of investment. And on the other side, you have the bad STR markets, major cities like New York or Barcelona, which have become incredibly high risk because of crackdowns and outright bans. So when you combine the total collapse of the old guard, the rise of this new, smarter model, and then you pour in these two powerful forces of tech and regulation, where do you end up? Well, you arrive in a brand new world order, one that's built around an entirely new concept: flexible living. See, this isn't just about vacation rentals anymore. The borders between all the different types of accommodation are just dissolving. Short-term stays, mid-term rentals for remote workers, even traditional apartments. It is all converging into a single hybrid model that completely blends how we live, how we work, and how we travel. And this big convergence has made the industry a prime target for big money. We've seen this movie before. The short-term rental sector is now following the exact same path to institutionalization that we saw with self-storage, then student housing, then build-to-rent. This means more professionalization, more standardization, and billions in capital looking for a place to go. It is now officially a mature institutional asset class. So let's bring it all home. A very clear line has been drawn in the sand. The winners of 2025 are the local first networks, the companies that are built on AI from the ground up, luxury brands, and these new hybrid platforms. And the losers? They're the centralized operators, the ones with those asset-heavy models, and pretty much anyone stuck in an urban market with heavy regulatory risk. The industry has made its choice. So, the playbook for success is now written. The winning strategy is crystal clear, and all that capital is flowing towards it. This leaves us with one final, absolutely massive question. In this new world of flexible living, who is going to rise up and build the dominant all-in-one platform? The Salesforce, if you will, for this entire new category? That is the billion-dollar question.